All right, let's dive into the world of Benjamin Graham and the intelligent investor.
Sounds good to me.
We've got excerpts straight from the book,
Okay.
plus some modern-day commentary from Jason Zweig.
Cool.
Now, we both know this is a classic in the investing world,
It really is.
but have you ever thought about how Graham's ideas, which he wrote decades ago,
Right.
still influence how we invest today?
It's incredible, actually.
It really is. That's what we're here to figure out.
Yeah.
It's fascinating how these principles
Yeah.
have held up over time
They really have.
through market crashes,
Actually,
the rise of the internet, everything.
Just like, well, timeless wisdom,
Totally. You think investing advice from decades ago
Yeah.
would be completely obsolete now?
You would think that, wouldn't you?
But Graham's insights are different.
They really are.
It's like he had this ability to see through all the distractions
Yeah.
and get to the core of what matters most when you want to build real wealth. Yeah. Yeah. Speaking of all those distractions, we're also going to tackle this big question of investing versus speculation.
Oh, yeah, that's a good one.
And let's just say
Yeah.
one can make you rich and the other,
Yeah.
it makes your broker rich.
Makes your broker rich.
Exactly.
You want to be on the right side of that, trust me.
For sure. We've all seen those can't miss opportunities
Oh, tell me about it.
that end up, well, missing.
Yeah.
Think about the dot-com bubble.
Oh, yeah.
Everyone was piling into tech stocks, right?
Absolutely.
Thinking they
Well,
were going to become millionaires overnight.
Yeah, for sure.
But just because an industry is booming, that doesn't mean individual investors are going to profit.
You're right, it doesn't. So who is this intelligent investor Graham keeps talking about?
Yeah. Is it just someone with a super high IQ?
Right. Someone who can predict the market.
Can they see the future?
Yeah, are they like a fortune teller?
I wish. But actually,
Yeah.
Graham's idea of an intelligent investor is much more down to earth.
It's not about brilliance, it's about temperament.
Mm.
Having the patience, the discipline, and the
Yeah.
ability to think for yourself.
Okay.
He emphasizes that controlling your emotions, that matters more than trying to outsmart everyone else.
Oh, that makes a lot of sense.
Yeah.
I mean, we've all seen how fear and greed
Yeah.
drive people to make impulsive decisions,
Impulsive, yeah.
especially when it comes to money.
Oh, yeah.
You think about those panic sellers, right?
Oh, for sure.
Dump their stocks at the first sign of trouble
Or those folks who chase the latest hot stock without even understanding it.
without doing any research.
Exactly.
Yeah,
And you know what? Graham himself wasn't immune to these pitfalls.
he wasn't.
He wasn't.
Oh, that's interesting.
In the book, he talks about this time he made a huge return,
Mm-hmm.
a 250% return on this company called Savold Tire
Well,
in just one day.
Seville Tire,
Yeah.
250%.
That's pretty amazing, right?
It does.
Well, a few months later, the company completely went bust.
Ouch.
Talk about a reality check.
Wow. So even someone considered the father of value investing got caught up in the hype.
It happens.
It happens to the best of us.
It happens to the best of us.
That's reassuring in a weird way.
In a way.
It shows that even if we mess up,
Yeah,
we can learn and get back on track.
exactly. We're all human.
We're all human. Speaking of getting back on track, let's dig into this whole investing versus speculation thing.
All right, let's do it.
Graham draws this clear line
He does.
between these two approaches,
Yeah,
but I think a lot of people blur that line without realizing it.
they do all the time.
Yeah.
Think of it this way.
Yeah.
Investing, it's like playing a game where the odds are actually in your favor.
Okay.
You're buying a piece of a business,
Uh-huh.
you're doing your research, and you're in it for the long haul.
Okay.
Speculation, on the other hand, that's more like, well, playing roulette.
Okay.
It's all about timing the market, making quick bets,
Oh, yeah.
and just hoping for the best.
Yeah, just crossing your fingers.
Crossing your fingers.
Yeah.
And we know what they say about the house always winning?
The house always wins.
Yeah.
That's not a gamble I want to take with my money.
Not with hard-earned money, no.
But, even if you understand the difference, like you understand it intellectually,
Yeah.
it can still be so tempting to get caught up in all the frenzy,
Oh, absolutely.
especially when you see everyone else seemingly making a killing.
It's tough. It's tough.
It is tough.
Well, Graham actually has this quote
Okay.
that gets to the heart of it.
Okay.
He says, people who invest make money for themselves. People who speculate make money for their brokers.
Okay, that's a good one.
So-
So true.
It's a mic drop moment.
It is. It's like he's saying, wake up, people.
Right.
Don't let Wall Street play you. So how do we avoid that?
Yeah, how do we not fall into that trap?
How do we make sure we're actually intelligent investors,
That's the question.
not speculators?
Right. A good place to start is to remember another one of Graham's key insights.
Okay.
He said, obvious prospects for physical growth in a business do not translate into obvious profits for investors.
I see.
So just because a company is in a hot industry or has like a trendy product, it doesn't mean you're guaranteed to make money if you buy their stock.
Right. There's a difference.
There is.
I'm starting to see a theme here.
What's that?
It's all about looking beyond the hype,
Yeah,
doing your research,
absolutely.
not letting your emotions cloud your judgment.
That's it.
Okay, so say we've taken all of this to heart.
Yeah.
We're committed to being intelligent investors,
Okay.
not speculators.
Right.
What's next? Do we just jump into the market?
Yeah, do we just pick stocks?
Pick individual companies.
Is that it?
Is that how we do it?
Not so fast.
Okay.
Graham recommends a more measured approach,
Okay.
especially for those he calls defensive investors. He suggests starting with a balanced portfolio, a 50-50 split between stocks and bonds.
Really? 50-50. I would have thought he'd be all about stocks.
Right. All stocks all the time.
Yeah. But I guess this is about managing risk.
Exactly. It's about managing that risk.
Hedging your bets.
Exactly.
Yeah.
And let's be realistic.
Yeah.
Not everyone has the time or the expertise to be a full-blown stock picker. You know?
Right.
That 50-50 approach, that gives you a solid foundation.
Okay.
It forces you to think about asset allocation,
Yeah.
diversification from the beginning.
Okay, that makes a lot of sense.
Yeah.
It's like building a house. You know,
Oh, yeah.
you need a strong foundation before you can get to all the fancy stuff.
Before you can add the bells and whistles.
Yeah, exactly.
You got it.
So we've got our 50-50 split. What else does Graham recommend for this defensive investor?
All right. So he's big on this idea of dollar cost averaging.
Dollar cost averaging.
Dollar cost averaging. It's simple, but it's really powerful.
Yeah.
You basically invest a fixed amount of money at regular intervals.
Like every month.
Yeah, every month, every quarter.
Okay.
Doesn't matter what the market's doing.
No, so rain or shine, you're investing.
Exactly. You're taking the emotion out of it, sticking to the plan.
Like a financial autopilot.
Like autopilot.
I like it.
And over time, this can really work to your advantage.
Okay.
When the market is down, you're buying more shares at a lower price.
Oh, I see.
And when the market is up, you're buying fewer shares at a higher price.
Right.
It all balances out in the end.
It all evens out. All right. So we've covered stocks, bonds, dollar cost averaging.
Right.
What about gold?
Gold.
Does Grant have anything to say about that?
He does.
Okay.
And his stance might surprise you.
Okay.
He's actually pretty cautious about gold.
Oh, really?
He sees it more as a speculation play than a real investment.
Okay, so that kind of goes against what a lot of people say.
It does.
I'm guessing it's because he's all about investing in businesses that actually generate earnings.
You got it.
Right. Gold doesn't really produce anything, you know?
Yeah, it just sits there.
Just sits there.
Okay.
Now, if you're really into precious metals,
Yeah.
Graham suggests maybe looking at a well-diversified mutual fund that focuses on precious metal companies.
So you're at least investing in businesses that are actually doing something.
Exactly. Businesses that are involved in the mining and the production of gold.
They're making something.
They're making something, yeah.
That makes sense. So we've laid out the foundation for this defensive investor.
Yeah.
But what about for those of us who are feeling a little more adventurous?
Go, yeah.
A little more enterprising,
Yeah, sorry.
ready to pick some individual stocks.
Right, ready to roll up their sleeves.
Yeah, ready to get in the game.
I like it. Welcome back. So we've been laying this groundwork, right? Yeah, we've been talking about those core principles from Benjamin Graham
Exactly.
for the intelligent investor.
That's right.
Now it's time to get a little bit more hands-on.
Yeah, let's get practical.
I'm ready to talk about picking stocks.
All right, let's pick some stocks.
I mean, that's where it gets really interesting, right?
That's where the rubber meets the road.
Exactly.
It can be really exciting.
Yeah, before we start scrolling through those tickers,
Right.
Graham would want us to have a solid framework, wouldn't he?
He would
For analyzing companies.
a way to think about them.
He's not about chasing trends.
Well, he's not about the hype,
He wants us to understand the value of the business.
the underlying value.
So no jumping on the bandwagon just because everyone else is.
Nope, no bandwagons.
What does that framework look like? What are the factors we should be considering?
He really focuses on three key things.
Okay.
Value, earning stability,
Okay.
and margin of safety.
All right. So value, what does that even mean?
It means you got to look beyond just the stock price. You
Okay.
have to really understand what that business is worth.
Ah, so it's assets.
It's assets, it's earnings power, it's future prospects.
That's like being a detective,
Right.
looking for clues.
You got it.
Not just the flashy exterior, what's hidden beneath the surface.
That's it. That's it.
Okay, and then earning stability.
Right. Graham wants you to find companies with a history of consistent earnings.
Okay, so no roller coaster.
Yeah, he's not a fan of those wild swings in profits.
Yeah, you want that slow and steady growth.
Even if those swings are, on the upside, he's all about predictability.
Yeah, reliability.
Exactly.
What about this margin of safety thing? What is that?
Oh, it's one of his most important concepts.
Okay.
It's all about minimizing risk.
Okay.
Think of it as a buffer.
Okay.
You only buy a stock if its market price is much lower than what you think it's actually worth.
So, like you're getting a deal.
You're getting a bargain.
Like buying $1 for 50 cents.
Yeah, exactly. And that discount, that's your margin of safety.
Right.
It protects you just in case your initial assessment is wrong.
Okay, so it's like a built-in cushion
A little cushion.
to protect you when things go wrong, because they always do.
Things happen.
Okay, that's brilliant, but figuring out that intrinsic value, the margin of safety,
Yeah, that's where it gets tricky.
that's the hard part, right?
It takes some work.
Yeah.
But Graham gives a lot of guidance in the book.
Okay.
And there are tons of resources out there to
Okay.
help you with the calculations.
So I don't have to be a math whiz to figure this out.
No, and remember, it's not about being precisely right.
Right.
It's about having a reasonable estimate, making sure you're not overpaying.
Okay, so generally in the right ballpark.
Yeah, that's the idea.
But even with the best analysis,
Right.
the market can be unpredictable.
Oh, it definitely can.
How do we stay rational when everything's going haywire?
That's where Graham's famous analogy comes in. Mr. Market.
Ah, Mr. Market. Tell me about him.
Imagine him as this manic depressive guy,
Okay.
shows up at your door every day,
Right.
offering to buy or sell stocks
Uh-huh.
at these crazy prices.
So some days he's feeling good.
Euphoric.
Other days, not so much.
You, me.
Kind of reminds me of my social media feed after an election.
Exactly. But here's the thing. Mr. Market's moods,
Yeah.
they don't always reflect the true value of the businesses.
Right. It's all in his head.
It's all in his head.
Okay.
Sometimes he's overly optimistic.
Yeah.
Sometimes irrationally pessimistic.
This is like a mind game.
It is a mind game.
Gotcha.
And your job as an intelligent investor
Yeah.
is to not get swept up in his emotional roller coaster.
Don't let him dictate your decisions.
Exactly.
Stick to your analysis.
See your analysis.
Look for that margin of safety
That's it.
and walk away if his prices don't make sense.
You got it?
Okay. I like it.
There's a great example of this. Back in 2020, when the market crashed because of the pandemic,
Oh, yeah. That was a scary time.
Mr. Market, he was in full panic mode.
Yeah.
People were selling their stocks out of fear.
Out of fear. Yeah.
But you know what? The actual value of a lot of those great businesses,
Right.
it didn't really change that much.
It was just fear driving everything.
It was just fear, yeah.
People were selling their houses for pennies on the dollar
Exactly.
just because the news was bad.
Just because of the news.
Okay.
And guess what? A lot of those businesses rebounded
They did, yeah.
pretty quickly.
They did.
The people who held onto their investments or even bought more at those low prices,
Yeah,
they ended up doing pretty well.
they did.
They weren't swayed by Mr. Market's, temporary meltdown.
They kept their cool.
They kept their cool, stuck to their principles,
Yeah.
and benefited from his irrationality.
That's a perfect example of how this intelligent investor mindset
Right.
can really play out in the real world.
In the real world, yeah.
It's not just theory.
It's not just an idea.
It gets results.
It works.
Okay. But even with all this talk about rationality, discipline,
Yeah.
I'm sure some people are thinking,
What are they thinking?
does this really work?
Does it work?
Are there people who have actually been successful
Yeah. Are there real examples?
following Graham's principles?
That's a great question.
That's a fair question.
And I'm glad you asked it
Yeah.
because one of the best parts of this book
Yeah.
is the appendix
The appendix.
called The Super Investors of Graham and Doddsville.
Okay, so these are real people
Real people
who have put these ideas into practice.
into practice, yeah,
and made a lot of money.
and come out on top.
I'm intrigued. Tell me more.
And these are just a few cherry-picked examples.
Okay.
Graham identified these investors before they became super investors.
Really?
He was able to see those hallmarks of intelligent investing.
So he was like a talent scout.
A talent scout for value investors.
That's awesome.
It's pretty amazing.
Okay.
And he tracked their performance over time.
So he was proving his point.
He was showing that it works.
But these super investors, they weren't all exactly the same.
Right. They had different styles, different approaches. They
Yeah.
came from different backgrounds, managed different types of funds.
Right.
But there was this one key commonality.
What was that?
They all focused on buying businesses, not stocks.
Okay, I've heard that phrase a few times.
It's an important one.
I think I'm starting to understand.
What do you think it means?
It's about looking beyond the ticker symbol
Yes.
and really understanding the company.
That's it.
You're not just playing a numbers game.
Right.
You're making a decision about owning a piece of a business.
You're buying a business.
You're buying a business. Okay.
One of my favorite examples
Right.
is the story of the Washington Post Company back in 1973.
The Washington Post, all right.
They were selling for about $80 million on the stock market.
Okay.
But Graham pointed out that their assets alone,
Uh-huh.
things like their real estate, their printing presses,
Right.
their cable TV franchises, those could have easily been worth $400 million.
Whoa, that's a huge difference.
It's massive.
So the market was undervaluing them.
Completely undervaluing them.
Why wouldn't people have seen that?
That's the million-dollar question, isn't it?
It is.
Sometimes the market just gets things wrong.
Okay.
It can be irrational, driven by fear, by greed.
It can be emotional.
It can be emotional,
Hey.
and it can overlook those hidden gems.
And that's where the intelligent investor has the advantage.
Exactly. They can see through the noise.
They're playing a different game.
They're playing the long game.
Right. So it's not about getting lucky.
No.
It's about having that framework, evaluating the businesses,
Sticking to your principles.
being patient.
Patience, that's key.
Okay, but all this talk about value investing,
Yeah.
long-term strategies,
Yeah.
it can feel kind of dull
Oh,
compared to all the excitement of chasing the latest trends.
the hot stocks.
The hot stocks, yeah. Everyone loves a good underdog story.
Huh.
But sometimes you just want to jump on the bandwagon
I get it.
and hope for the best.
It's tempting. It's tempting.
It is tempting.
But here's the thing.
Yeah,
Building wealth through intelligent investing,
right.
it's not about getting rich quick.
Okay.
It's about making those sound decisions,
Yeah.
managing your risk,
Uh-huh.
and letting your money grow steadily over time.
Slow and steady wins the race.
That's right, the tortoise and the hare.
Exactly. But I'm guessing it's more than just having the right mindset.
Is.
What about the actual process?
Yeah,
What practical steps can we take to make sure we're actually doing this?
that's what we're going to talk about next.
All right, so we've been on this journey with Benjamin Graham, the intelligent investor.
We have.
We've talked about how to spot those undervalued businesses,
Yeah,
how to stay calm when Mr. Market is losing his mind,
right.
and we even got to hear about those super investors
Was super
who
investing.
put Graham's principles into action
Right.
and made a killing.
It's pretty inspiring.
It is inspiring.
Yeah.
But, knowing the theory
Yeah.
and actually doing it
Yeah.
in the real world of investing
They're in the wild.
are two different things.
They are. They are.
How do we bridge that gap?
Yeah, how do we go from just nodding along
Right, just understanding.
to actually using it
Right,
with our own money?
with our hard-earned cash.
Exactly.
Yeah, how do we do that?
Well, one of the most important things Graham talks about is having a clear investment philosophy.
Okay, so it's not just about following rules.
No, not a rigid set of rules.
Okay,
It's more like having some guiding principles,
so like a framework.
a framework, to help you make those decisions.
Exactly, decisions that match your goals
Okay.
and how much risk you're okay with.
Okay. Your risk tolerance.
And when things get a little crazy, having that clarity can help you stay grounded.
Okay. But we're all human, right?
We are. We're
We're going to have moments of doubt, moments of temptation,
Oh, absolute.
times where we second guess ourselves. That's natural.
So how do we manage those emotions?
Well, that's where Graham's emphasis on patience really comes in. He keeps reminding us that building wealth, real wealth, this isn't about getting rich quick.
Yeah,
It's about slow and steady growth over the long term.
long term.
Yeah.
That's easier said than done these days, right?
It is. It's tough. Everyone's talking about getting rich quickly.
Yeah, overnight millionaires.
There's this pressure to keep up.
Keep up, yeah.
It's everywhere.
It's tough.
It's why it's more important now than ever to tune out the noise.
Yeah,
Less financial news, avoid those clickbait headlines.
right.
And don't get caught up in those day-to-day market swings.
So ignore Mr. Market when he's being dramatic.
Exactly. He loves to play on our emotions.
He thrives on that fear and greed. It's like those social media algorithms,
Oh, yeah.
They keep feeding you the same stuff.
Echo chamber,
Yeah, echo chamber, and it warps your perspective.
big time.
Yeah, and that could lead to some bad decisions, especially when it comes to investing.
Absolutely. So take a step back, take a deep breath,
Okay, breathe.
focus on what you can actually control.
Okay, I'm ready to take control. What should I be focusing on?
Graham would say focus on how much you're investing,
Okay,
what you're investing in,
right.
and how long you hold those investments.
Those are the things you can actually control.
Those are the things within your power.
Okay, so having a plan,
Yes.
sticking to it,
Sticking to it.
and not letting the market boss you around.
Exactly.
I like that. That's empowering.
It is empowering, and it takes us back to one of the core messages of this book.
Which is,
You are the one in control.
okay,
You have the power to make those smart decisions with your money.
I love that. Okay, before we finish up, one last question.
Okay, shoot.
We've talked a lot about controlling our emotions,
We have.
but that can feel kind of vague sometimes.
It can.
Any practical advice?
Yeah, so it's a lifelong process, right?
All right.
But one of the best things you can do is develop a system for how you make those decisions. It's a checklist.
Like a checklist. Exactly.
Okay.
Define your criteria, what's important to you,
Yeah.
and stick to it. That way, when emotions start to take over,
Yeah.
you have something solid to bring you back.
Okay, so like a pre-flight checklist for pilots.
Exactly.
You go through those steps, make sure everything is good to go,
You got it.
and then you take off.
You take off.
Okay, I like it. Anything else?
Yeah, it can also be really helpful to have someone you trust to bounce ideas off of.
Oh, like a sounding board.
A sounding board,
Yeah.
Someone who can help you see things from a different angle,
Yeah.
maybe challenge you when you're getting a little carried away.
Like a coach
Like a coach in your corner.
to help you stay on track.
Exactly.
Okay, that's great advice.
And remember, investing, it's a journey.
A journey, not a destination.
There will be bumps in the road, there will be mistakes.
Yeah.
But by following Graham's principles, you can handle those challenges.
You can navigate those rough waters.
And build wealth over time. Well said, well said. I think we've reached the end of our deep dive into the intelligent investor.
We covered a lot.
We did. From the basics of value investing
Yeah.
to the psychology of managing our money.
So much good stuff.
But the most important takeaway, I think,
Yeah.
is that we can all become intelligent investors.
Absolutely.
It's not about being a genius. It's about having the right approach,
Right mindset.
right mindset, the right tools.
You got it.
It's been great exploring these ideas with you.
It has. It's been a pleasure.
To our listener, thanks for joining us on this deep dive. We hope you learned something valuable that you can use on your own investing journey. And remember, investing is a lifelong process. Keep learning, keep growing, and the intelligent investor is a great place to start. Until next time, happy investing.